Elsewhere, Family Bank Group has posted a 3.02 billion shilling profit before tax for the period between July to September 2023. During the period, total assets increased to 140.97 billion shillings, a 9.6% increase from the 128.5 billion shillings reported in September 2022.
The increase in the total assets was driven by the growth in customer deposits, which rose by 16.6% to 108 billion Kenyan shillings from 93.2 billion Kenyan shillings reported same period in financial year 2022. The bank continued to lend, which saw the loans and advances increase by 6% to 84.6 billion Kenyan shillings. Investments in the government securities increased by 21% to close at 30.3 billion Kenyan shillings. Interest income grew by 18% to 11.34 billion shillings, while interest expenses grew by 34.6% to close at 4.4 billion shillings. The faster growth in the interest expenses was mainly driven by the general increase in funding costs for deposits and borrowings in line with the tight monetary policies by the government and increased government borrowing costs in the domestic market. Total unfunded income increased by 5.6% to close at 2.9 billion shillings for Q3 2023 compared to 2.8 billion shillings recorded during the same period last year. The group's prudential provisioning against the loan book increased by 110% as the bank took a cushion against future defaults in line with the challenging macroeconomic conditions. This saw the group's loan loss provision charge increase to 989.4 million shillings during the period. The bank's statutory ratios compliance position remained strong, with the total capital ratio closing at 18.3%, while the liquidity ratio stood at 43.4% against the minimum statutory ratio of 20%. Edna Murungi for Lunchtime News.